Morgan Stanley earns $1.14 a share in the third quarter, beating estimates that were $1.12 a share. Revenue coming in at $9.9 billion versus expectations of $7.42 billion. This was a beat. Now, Scott, Morgan Stanley, however, really earned just 2 cents a share when you take into account the widening of debt-related spreads. However, analysts were looking for a loss there. So any way you slice it, this is still a beat. What's the stock looking like today? Pretty choppy pre-market.
It's choppy pre-market because the banks had a really big move yesterday. If Morgan Stanley would have came out with their numbers yesterday with Goldman and Bank of America, they would have said it's up because of the report. And now it's down 30 cents. They're going to be like, oh, they didn't like the report. So it just goes to show you where you have to know where the stock is coming from, know where it is when it's reporting, and figure out what the direction could be. If you look at the chart of Morgan Stanley, take a look. It's had a big move. This was the move from that low, right? This was that reversal on that Tuesday. And then it just cleared a downtrend, which was pretty important. So if you take a closer look here, it being down a little bit is no big deal. I think chasing banks has not been prudent. It's been very frustrating, and after a move like this, hard to do. I think if you want to buy a dip into the 15 area, I think it's a better spot to enter versus chasing it, over above 17.
And if you own it after yesterday coming into this, even if we're seeing Morgan Stanley kind of fall a little bit, do you want to be a seller there, or do you need to wait now?
Well, if you're an owner of banks, typically you're an owner because you're an investor, and you've probably been owning it from way too long ago. So just because it's down a little bit with earnings, I wouldn't use this to sell it. I do think that the low for banks could be in. Watch 15. If you're actively maneuvering it, if it starts to break below 15, that will show me that something's wrong. As long as it stays above 15, I'll show you one more time. I think it'll be healthy, and I think you can get more upside action. So let's take a look at that chart one more time. Here you go. 15 to me is very important. As long as it stays above that, I think you see some upside momentum, and you'll make some more money in this position this year.
All right, so 15 is kind of the line in the sand for Morgan Stanley. Stay tuned for more earnings coverage from the street.